Hi, welcome to the Market Alert for Monday the 25th of September 2016. So Friday's trading, 23rd of September, we had a sell signal. The market moved lower and it took several hours before the market actually went through the scalp. And of course I sent out a note saying that during this sideways move where the market didn't know what to do, to make sure you didn't expose yourself to the 40 points, just in case the plunge protection team came into the market and moved prices back to the upside as it was so quiet. After doing a bit of research, I'll explain in a minute why the market was sideways and then why it continued to move lower as well later on in the session. But a question that I've received is about how to use how could you actually use the 20 bar moving average to stay in the trade. Well, if we look through here, you can see how the market was struggling. It came back through, but failed to close through on every single occasion, and thereby keeping the market to the downside. So one way to play this, of course, is that once you get through the 20 scalp or get to it, you can remove the initial stop loss. You can move the stop to break even, or again, if you want to, once it's gone through, if the market comes back and closes above the 20 bar average, you can use that as a way to actually get out of the trade. And this will allow you then to stay in the trade if the market is trending, as in this case, all the way through the actual trade. You can see it took until 8 p.m. before the market came back, and then it went back through. But of course you were getting late into the session, and of course it's Friday as well. So that's one thing you can actually do. There are many other things you can do as well. You could use other smaller time frame averages as well, which I'm not going to go into in this video because it's just a market alert. But if you want sort of a longer term look on an intraday basis, that is, where you've got an established trend already and the market's failing to close above that 20 bar average, you can move the actual initial stop to break even when the market hits the scalp, and then wait to see if it actually closes back above that in order to then just close out the position. You can then also add 50% above that bar that actually closes above it. Like I say, there's numerous things that you can actually do, but keeping things simple, that to me is a very effective way of doing it. And of course we do that when the market trades through the scalp with a big bar and through the psychological levels, and then that allows us to trail the stock 50%, but you could actually just use the average as well, just to stay with the trade as well. So another way of actually doing this. In the daily chart, the market obviously sideways for Friday. You can see that here, putting in a reversal, also an inside bar. And the reason the market was so quiet, I have discovered, and I'd forgotten about this, is that on Friday last, the US in Congress were voting on JASTA, which is, what does it stand for? We've got one, Justice Against Sponsors of Terrorism Act. Now, why is this important? Why is this piece of legislation in the US very important? Well, Obama has actually blocked it. Obviously, they have an alliance with the US. This is Saudi Arabia I'm talking about, the paragon of human rights. But I don't want to get too political at this point. And basically, they have threatened the Saudis have threatened that if Saudi Arabia is pulled into the victims of the 9/11 bill, then there will be all hell to pay, and that means that they will sell all of the bonds and everything else that they own, which runs into just under $1 trillion, causing a financial problem. So this is, again, it's not about justice, it's about keeping the financial system together, as Saudi Arabia knows that it will be first on the cards from the 9/11 victims' families, who will then sue the Saudis for their part in the events of 9/11. So this is an economic situation here that good old Obama has vetoed. He did it on Friday night, but the bad news for him is that it still will still go through this week as Congress sits up to the run of the US elections. So that's number one, where we could see some very interesting things happening this week. And the second, coming back to more economic things here, and that is Merkel has ruled out bailout for Deutsche Bank. Depositors bail incoming. I've warned about this for a long time, and I'm just in the process of putting together the final parts of the whole story of the financial system from Bretton Woods all the way through to the current day and what's likely to happen going forward as well. That should be available at least by Tuesday, if not earlier, and I'll give you the heads up on that. It's taken weeks to put together, but it gives you sort of the abridged version of how things have panned out during the last 40 years and why we're in the financial mess we're currently in. But again, it also focuses on this bail-in as well. There won't be any more bailouts by the government unless they're painted into a corner to do so. And you'll understand why when you actually see the video behind this. So keep an eye on this one as well. Deutsche Bank got major problems, fines and everything else. Good article here if you want more details about the different fines that they've had and the manipulation they've been creating in the gold and silver market, etc., etc. It just goes on. List is too long to actually cover in this video. And finally, implied volatility, 1088 up from 1050, which you'd expect as the market made a slow grind to the downside during Friday's session, as the market waited to see if Obama would veto Jester, which he has done. So there you go. That's it for today. Let's see how the markets open on Monday. News-wise, just before we go, I've forgotten. Let's just have a quick look. See what's out on Monday. If there's anything important at 3 p.m. There's absolutely nothing now. 3 p.m. is just new home sales. And again, this is forecast to actually be a lot lower, 650 the previous month. So a drop of over 60,000 is forecast. So again, putting downside pressure on the market in theory, but you never know in these strange and weird times that we're now living with, the full-blown market manipulation which we currently see. So that's it for today. Enjoy the rest of your weekend. As ever, thanks for watching, and I shall see you in the next one.